Okay, fellow traders. So we're back again, another market review for Monday's trading. And obviously, first things first, always make sure your chart is set to New York. And we're going to be going through the possible opportunities that were available on gold on the 5-minute chart using the ICT breaker strategy. So once you've set your chart to New York, make sure that you have a line at 12 midnight and a line that shows you 7 a.m. Once you have that, everything on the left hand side of 7 a.m. is going to be your London session. You want to highlight your London session high, highlight your London session low, and you want to highlight any breakers or fair value gaps that stand out. Example, right here we have a breaker. For people that are here on the first time, what is a breaker? A breaker is a structure that is like so: a high, a low, a high, a high, a break in market structure. Vice versa, if you turn that around, that is also a bullish breaker. Moving on, so to describe yesterday's trading best way and to know how you could have taken advantage of these opportunities, this is how you were supposed to interpret or see price action play out. So Friday's high, which is right here, got taken out. Actually, this becomes that that little bit that little bit of trading that happens on a Sunday, but to me, it's just Friday, but Sunday. Sunday's high was taken out here. It wasn't a real like big sweep, but it was a sweep nonetheless. And then we started to break down, and we created a breaker, and we broke down right up until the New York session, and we were continuing to break down. So as always, I start trading at exactly 8:30. I'm always waiting for the first opportunity to take advantage of it there. Reason being because that's when I have more data to kind of see where price is willing to go and wants to go. So immediately here at 8:30 we had this break on the low side here, and again, as I've stated before, breakers come in variations, and once you understand them, you're able to spot them and take advantage of them. So high, low, false high, break in market structure, and this break led to us filling this gap here that was left on the 15-minute chart. As I've said before, your 15-minute chart is used for you to see where there is liquidity residing. Why is price going there? It helps you see that. So we're able to fill it there, but I still wasn't part of that move there because I just wasn't sure as yet. But this was the first move that you could have been part of. How were you going to enter here? So, where's the short? Short right there. Boom. Boom. And I think I should explain why price did that so that you have a better understanding. So, not a big move, but a good move. And we are scalping. Sometimes they're big moves, sometimes they're just real short moves. This was a short move. So, right here, boom, 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 we have a breaking market structure. Boom, breaking market structure. A little bit consolidation over here, and then we break again. So, now the price is retracing all the way up here around 8. If you had highlighted this fair value gap right there, or just been aware of this breaker right here, because breakers are going to act, or in my mind, they act as support and resistance in some type of way. I will elaborate that some other time, but over here, so we broke down, came back, and at a point where we could have been anticipating lower prices, structure did give us another breaker: high, low, high, break in market structure. Quick retracement right there. We went in and we filled in that gap. Immediately after filling that gap, price broke all the way onto the upside, and you're going to wait until price takes out this high right here. So price makes a low, makes a high, makes a small low, breaks up higher, but this was the high that I was waiting for to be taken advantage of. And as you see, this trade here is still happening. My current target for here is right here. This is yesterday's high. If not yesterday's high, then I wanted to at least reach this breaker right here. But I'm holding for right here. So why I say that, because we had already traded down. We took out the London session high, so the probability of us making a run for liquidity on the upside is very high, but we need to wait for that opportunity. Price did trade down and we created relative equal lows, filled in this liquidity gap, and immediately after filling in this liquidity gap, see what price did? It impulsed. It went to the upside impulsively. We did retrace in the Asian session, got the slow here, but that is totally understandable, because why? If we've broken above here, that means this is an order block. What do you do when you have multiple candles following each other as an order block? You measure half of that and becomes the mean threshold, and off there you could have entered and went long, and from here to here is the trade that you could be holding right now. So you're getting, see it here first before it even pans out. And Monday always has a trade that happens around 10:30 to lunchtime that takes you into the next day's trading. And there's always just that one trade that I like to hold. Same thing on a Wednesday too as well. There's also that long trade that takes you into Thursday's trading, but this comes with time and experience. The more you dabble with the strategy and you understand what you are looking for, the more you'll understand how these things come together and they work. But that's it. Keep the video nice and short, sweet.